another set of numbers that came by yesterday. It was MAS Financial Services. Reported a good set of second quarter numbers, growth in assets under management being upwards of 20%, dispersals as well, though there was some deterioration in asset quality. Kamlesh Gandhi, who's the chairman and managing director of the company, joins in now. Thanks a lot, Mr. Gandhi, for joining in. I remember, the last time you joined us, you did say that in the MFI portfolio, there may be some sort of stress as far as the asset quality is concerned, though you were very perturbed about that. On asset quality as well as the AUM growth itself, I'd like your comments, because you've always been targeting between 20 to 25% AUM growth annually. This quarter, you've done around 21.8%. Do you stick to that AUM growth guidance? And any commentary on asset quality?
So good morning. So as you rightly remarked that we always give a guidance anywhere between a range-bound guidance between 20 to 25%. So on a consolidated basis, we grew at 22.7%. And going forward over a medium to long term, we maintain our guidance between 20 to 25%. But having said that, we don't mind a few percentage lower growth in favor of a better quality and a consistent profitability.
Hi, Mr. Gandhi. Good morning and good to see you. I want to ask you about your mix itself, because the growth was led by the CV and the SME portfolio. And most on the street are sounding a little bit cautious on that front. But you're growing that segment. You're not worried about asset quality? Do you think that's okay?
See, as far as SME is concerned, we are one of the oldest financiers to this segment. We have the niche expertise. And if you see, we have been growing at a very stable pace of anywhere around 22%. And we are prioritizing credit quality over growth there also. And fortunately, we could maintain good quality there. On CV, the growth is on a very low scale. So if you see CV book, it was hardly 800 crores last year, and this year it's around 900 crores. So the growth coming in CV is on a low base.
Right. You earlier pointed out that you don't mind, giving up some of your AUM growth for better asset quality. If you could, quantify that, because your growth is a wide range that you've given, 20 to 25%. Will you be in this range itself, or are we looking at late teens for the betterment of asset quality? And on asset quality itself, if you could give us a guidance.
So our top priority will be to maintain asset quality. And after that, whatever best we can do in terms of attaining anywhere between 20 to 25% will be done. Difficult to assign any number as of now. Our endeavor will be to be anywhere between 20 to 25%. But what I was sharing was that given the current situation, which is quite challenging at the market present, especially in terms of credit quality, if we find during the quarter that it is prudent to lower our growth by a percentage or two, we don't mind in favor of a better quality and profitability.
And what is the asset quality that you are looking at? Because we did see GNPAs actually, worsen to about 2.36 and net NPA as well move towards 1.57.
See, we have always maintained that we would be anywhere in a range of 2.25 to 2.5%. Given the segment in which we are working, there will be a range-bound GNPS between 2.25 to 2.5%. So I'd like to maintain that guidance, that it will be anywhere between 2.25 to 2.5%.
Got it. What about your NIMs? It was a pleasant surprise. It's moved up a little bit. I was reading the RBI minutes, and maybe that rate cut may be postponed by a couple of months. So we'll see how that goes. But do you think the cost of funds has peaked out? And in turn, what would be your guidance on your NIMs?
See, as far as NIMs are concerned, this quarter we got the advantage of having raised 500 crores of QIP last June, in the last quarter, that is in the end of June. So that helped us to improve our NIM marginally. And going forward, we see that we'll be in a position to maintain our NIM anywhere around 7%.
Around 7%. The last calculated number we have is around 6.17%. According to your calculations, what was it in the past quarter?
It was around same. It was 6.85 to 6.9.
Okay,
right.
So you expected it to maintain at the levels that we saw in the past quarter. Is that correct?
Yeah.
All right. What about return ratio, sir? What could you guide the street? Your ROEs?
See, ROAs will be anywhere between the range bound between 2.85 to 3%, and
right.
that will be resulting into an ROEs of anywhere between 15 to 16%.
All right, ROEs of 15 to 16% with 2.85 to 3% return on assets. Quickly, if you could give us, two numbers. One is you were looking at reducing your share of NBFCs coming down from what, 34% to closer to 20-25%. Where does that number stand at? And secondly, direct distribution. That too was looking to, you were looking to increase that. Where does that number stand at?
So currently we are at around 67-33 in favor of our direct distribution. And going forward over a period of next 3 to 4 years, we'll see that our direct distribution will increase to anywhere between 70 to 72%. And the rest will be through our distribution through NBFCs.
So how does that change things for you? Because, on direct distribution, you will have to actually incur more costs as well, for which you will get a higher yield. Whereas for NBFCs, you get, you have to give them margins. So your yields reduce, but at the same time, your costs reduce as well. So what is the offsetting overall impact of this?
So right from the distribution through NBFC is close to a 15 years old module for us now. And right from the inception, we have tried to maintain equal NIMs, whether it is an equal ROS, whether it is distribution through NBFCs or whether it is distribution through our direct channels. So there won't be much difference whenever there is a shift in distribution to our direct channel from NBFC channel.
So then why go the direct way?
See, relatively both the books will increase, but you will agree that our direct distribution will grow at a faster pace as compared to our indirect distribution through NBFCs. Say, for example, we are at around 200 branches. We'll be close to 200 within the next 3 years. We'll be doubling our branches. But at the same time, we don't see doubling our relationships with NBFCs at the same. So there will be a shift in distribution configuration towards our direct distribution as compared to our indirect distribution.
All right. Thanks a lot, Mr. Gandhi. Always a pleasure speaking with you. 20 to 25% AUM growth guidance with asset quality being maintained between 2.25 to 2.5 for the GNPA. Looking at return on assets between 2.85 to 3.3% as well. We'll slip into a short break on that note. But before we do that, is a quick programming note, and it doesn't get bigger than this. Coming up on CNBC-TV18 today, a fireside chat between Jensen Huang of NVIDIA and Mukesh Ambani of Reliance Industries, talking at the NVIDIA AI Summit 2024. These two gentlemen will speak about AI's pivotal role in shaping industries and India as emerging global AI leader.